Warning: this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week, welcome to Monday. I think it's been a little bit too long since we've had one of those wacky starts to the week, so I thought that's where I would take today's episode. So you have been warned, okay? You have been warned. We are going to some pretty strange places today. Just before we do, I wanted to make a quick observation, okay? I've seen an unusually high number of people commenting on my videos saying things like, I haven't watched the video, but you're wrong. I'm not really sure what this implies, but it seems to be, that's not nothing in my opinion. I think this probably speaks to sentiment being exhausted, okay? If people are just like, oh, I don't care, you're wrong, everyone's wrong, right? To me, that probably tells me we're getting close to some turns, but we're going to find out as always, right? As I've been saying over and over again, it's the CPI this week, and I really think that should be the make or break moment. We're going to show you some charts at the end as always. Now, when I said we were going to go to some wacky places today, okay, I'm a little bit late to this news, but the UFC fighter and double champion, Conor McGregor, is going to run for the president of Ireland in 2025. So have we hopped timelines? Is this where we are? I'm not saying that I don't think he could do a good job or anything like that. As you know, I don't really have a political stance, but I thought this was pretty funny. The OGs of the channel may well remember the solar cycles, okay? So if you're unfamiliar with this, as Tony the Bull points out here, this is the solar cycle sunspot number progression, and this has a cyclicality to it. And what's really interesting is this solar cycle is due to top somewhere between January of 24 and January of 26. What's really, really interesting to me about this is those tops in the solar cycles coincide with depressions and recessions. So correlation may not be causation all the time, okay? But undeniably, had you have said, well, when the solar cycle tops, I want to be getting defensive stocks, you would have been right more often than you would have been wrong. And again, I'm not saying correlation is causation, but I am saying the tops in sunspots, shown in orange here, also happen to coincide with spikes in unemployment, okay? And what have we got today? We have got a top in the solar sun cycles lining up with spiking unemployment, as I've been showing you pretty much every day that I make a video. But Tony has done it again, okay? The Mars-Vesta cycle suggests an astrological influence on market cycles that occurs every 3.84 to every 3.9 years, and that is roughly the same distance apart as Bitcoin's 4-year cycle lows. And so as Tony points out here, okay, one of the dominant rhythms in common stock prices is this cycle of approximately 4 years. We know that stocks have a 4-year cycle low, just like Bitcoin does. But it also seems to, roughly speaking, line up with this Mars-Vesta cycle. Pretty interesting, right? And the jury has been out for a very long time as to whether or not it is, of course, the astrology that drives these markets, or whether this is just in line with that 4-year presidential cycle, perhaps the 4-year Fed cycle. However, closer analysis reveals that this cycle also exists in countries where elections are held every 6 or 8 years. So possibly suggests that it is actually the stars. I can't believe I'm saying this. I told you going to some wacky places, right? It is possibly the stars that drive these markets. It is possibly the astrological cycles that do have some kind of impact on these markets. And from the wacky to the slightly less wacky here, okay, the spread between the US 2-year government bonds and the Fed's funds rate has fallen to negative 1.686%. Now, this is the most in 3 decades. What does this tell us? This is tell that to the bond market chart. So when the 2-year yield moves lower, we see the onset of a Fed cutting cycle shortly thereafter. This is the largest gap between the Fed's fund rate in orange and the 2-year yield that we have seen in over 30 years. In other words, the bond market expects the Fed to start cutting very, very heavily over the next few months. The Fed is indeed behind the curve as never before. So again, we get to sit here and say, tell that to the bond market, and hear me out because we're not done with the wackiness yet. When we pull up the CME probabilities, okay, we're currently sitting at about 75% probability that we're going to only see a 25 basis point cut. Is there scope for this thing to reprice heavily this way if CPI is significantly lower? Yes, I think there is. The Fed has shown quite a stubborn approach towards rate cuts, right? It has been digging in its heels and saying it doesn't want to be too quick or too early to cut, even though it's behind the curve. So I kind of lean in on the idea that why would you expect their behavior to change, right? Why would we expect them to suddenly be accommodated to markets? So I'm kind of thinking the CME's probably got this right, okay? And again, it could reprice in CPI. We'll figure that out. as and when we see the CPI data on Wednesday. But I told you it was going to be a wacky Monday, okay? This is the emergency alert system from the film Leave the World Behind, okay? So I don't really need to say a great deal more about that, other than, if we look here, 9/17 0204. So if we cancel the zeros, as you do in numerology, this is the 17th of September, 2024. Is this too wacky for you? Maybe, okay? And if it is, I completely understand and respect that. But also, if we get some kind of emergency black swan thing, blackout, power cut, cyber attack, whatever it is, show up on the 17th, the day before FOMC, then we will not be able to honestly say we weren't warned, were we? Okay, we were warned. We were warned many, many months in advance. And me and Chemo were kind of speculating, or laughing, I should say. We were laughing about the idea that perhaps something happens the day before the FOMC. Okay, and then they go, wow, see, we couldn't cut because the system was down. Now, this is not a prediction, let's be honest. I'm just having some fun here. And again, I understand it is probably too wacky for a lot of you, and that's fine. But for those of you that like a bit of wackiness, okay, hopefully you enjoyed this. But bringing this show back down to earth, this is Twitter's favourite fractal at the moment, with many people suggesting that we have spent enough time consolidating this move and are now getting ready to see a breakout. And the cycles are in our favour, okay? That's the number one thing. The cycles are in our favour. I could see myself trying one final long in out of this cycle low, but I do think we will need to see a very, very cold CPI print come into play for this to play out. Zooming out on the 4-year cycle, there does still seem to be plenty of time left for Bitcoin to do Bitcoin things. And when we put in that original high of about 73k for Bitcoin back in March, we were significantly outperforming the prior cycles at this point. But since then, we've had this seemingly orderly walk down, a reversion to the mean, and we're now right back on track. So does this mean the left translated cycle top is less likely than ever? I would think it does, yes. But is that a good thing? Because does that mean we can continue to run potentially for many, many months to come for Bitcoin? I like where we're sitting right now, and so far we are right back on track. We were, like I said, well ahead of schedule here, and now mean reversion complete, telling me at least to be open to Bitcoin continuing to do Bitcoin things. As I was saying, I think we got a cycle low here. Bob likes this as a cycle low. And I'm kind of thinking that a long actually makes sense since we can have quite a tight stop. If that really is the low, then we should not trade below that low. Makes me wonder if we have indeed got some kind of push and then a lower CPI print to catalyze this move. As Bob points out here, we do have to be open to paying attention once we get into this neighborhood, okay? If we get into this neighborhood and we can't trade above the prior high, if we can't flip this prior high into new support, then we probably have to entertain moving down into another cycle low. But as TechDev points out here, could it be that we just completed the first bull trap? Could this be? Because this would be hilarious, wouldn't it? This would be absolutely hilarious if we had this big, huge push. Okay, everyone calling tops at 73k, everyone saying we're going all the way back to the lows, or that was the top for the cycle, see you at the end of 2026 for the next 4-year low. And if in fact, we are about to experience the most violent near vertical portion. Is this still on the table? I know a lot of people would be saying no, but usually that's how markets like to move to harm the most amount of participants. So could we see this thing curl up into euphoria? Could we see a final hurrah in both the stocks and Bitcoin catalyzed by a lower CPI print on Wednesday? And again, a lot of people are calling for this to be distribution, and maybe that is going to turn out to be correct. But we do, objectively speaking, have a massive cup and handle pattern forming for Bitcoin, just like we saw on gold. And of course, these typically, once they break out to the upside, resolve to much higher prices. And speaking of cup and handle formations, okay, we've also got one in the Bitcoin to gold ratio, as Peter Brand points out here. Okay, this is a massive cup with handle against gold. The measured move target here is 123 ounces of gold per Bitcoin. Now, if this thing can play out, my goodness, what an exit. I certainly know what I would be exiting a lot of my Bitcoin to if this ratio was to come to fruition. If I had the choice of owning 123 ounces of gold or 1 Bitcoin, which would I rather own? Personally, at this ratio, I'd be thinking that owning 123 ounces of gold would be significantly better, and I'd be expecting this ratio, if we do get some kind of breakout to this level, to sharply revert back down to this neighborhood. Like I was saying with Bitcoin, have we got a cycle low here? Do I have to, I feel like I almost have to try and take a trade out of this cycle low, because if that is the cycle low, then we should not trade below it. So we've got very clear invalidation. And as you can see, we can have a very, very tight stop here, targeting those very, very large numbers. So I think I pretty much have to take this trade. I don't really like it. I'm not the biggest fan of it, but sometimes those are the ones that tend to work out the best. Notice how oil is still trending down, okay? Doesn't really believe inflation is sticky, does it? Okay, that's of note. Obviously, it can change quickly. We're in that timing window soon to see a daily cycle low and a bit of a bounce. But then the big question for me is, does this thing roll over? Okay, does it start to show recessionary and deflationary tendencies? Can the VIX be crushed this week? If it can, okay, absolutely awesome opportunity lower down to get some hedges on. And for the stock market, okay, can we leave behind a swing low here? Can we start to move higher? Can we see a big explosion, a big breakout higher, catalyzed by a lower CPI print? Can we see that this week? That is, for me, the biggest question of all. Any further downside out of CPI, and we have to face the music from a cycles perspective, okay, which is by the time we get to Wednesday, if we're still trading lower in Thursday, that would be day 27 of expected 36 to 44 day cycles for the S&P, telling us to keep an open mind about that being the top for this daily cycle, at least to be looking for further downside into around the final week of September. However, like I said, if we can indeed leave behind a half cycle low somewhere in this neighborhood, okay, now would be the time to do it. Now would be the time to start to see this thing push higher, and then we could even still be entertaining parabolic blow off tops potentially. Notice how if I use a parabolic curve, okay, we are no longer going to be able to continue to say that a blow off top is reasonable unless we come swinging out of here very, very soon. Okay, so absolutely wild times to be alive. Continue to kind of trade lower here into daily cycles and then have this more distributive top. And again, we're going to have to be on the lookout for calling tops here and scratching off that blow off top idea. So what a wild time to be alive. I think it's going to be quite a tense week moving into CPI. We will be live for the CPI print as always. And I do hope that we can see a much lower than expected CPI print. If we can get that, I do think there is one final chance to get underneath some trades and take this thing to the ultimate tops. And of course, the inverse is true as well. Either way, we'll continue to take it one day at a time. And until next time, take care from me. All the best. Cheers. Bye.